The top 10 investment banks have raked in $2.5 billion globally so far this quarter for their work on equity offerings. That's more than twice as much as last quarter and a good bit more than the same quarter last year. But deals are starting to get into pretty ridiculous territory. Bankrupt company Hertz got approval to raise equity to help work its way through the bankruptcy process. That's usually a time where creditors decide that they get to control the equity, and the equity values typically turn up worthless. Electric truck company Nikola recently went public via a special purpose acquisition vehicle and has filed to issue more shares, even though it has no revenue. There are a few things going on at once that's allowing this to happen. First, central banks and governments have pumped $15 trillion into global economies since the coronavirus first started. Interest rates are low, people are flush with cash, and so they're looking in ever riskier corners of the market to try to get some yield. At the same time, companies really need liquidity as the lockdowns have cut into their cash flow deeply. Raising debt at low interest rates, of course, is attractive. The problem is that debt has restrictive covenants, and many companies up to this point now are coming against those covenants. Equity markets and equity investors should give them a little bit more flexibility, and companies will gladly take it so long as animal spirits are allowing investors to do silly things.